Ladies and gentlemen, good day and welcome to the Eldeco Housing and Industries Limited Q4 FY21 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Lokesh Parekh from Christensen Advisory. Thank you, and over to you, Mr. Parekh.
Thank you, Janice. Good afternoon to all the participants on this call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result performance or achievements to differ significantly from what it expressed or implied by such forward-looking statements. To take us through the results and answer your questions today, we have the senior management of Eldeco Housing and Industries represented by Mr. Pankaj Bajaj, CMD, and Mr. Anil Kumar Dhanda, Group CFO. We will start the call with a brief overview of the past quarter by Mr. Bajaj, followed by a Q&A session. We would appreciate your cooperation in restricting yourself to 3 questions to allow other participants an opportunity to interact. I now hand over the call to Mr. Pankaj Bajaj. Over to you, sir.
Good afternoon, everyone. I welcome all the participants to Eldeco Housing and Industries Limited Q4 FY21 earnings call. I hope all of you are healthy and safe with your family. First, let me give you a brief overview of the on-ground situation of real estate in the Lucknow area. After witnessing a strong demand for residential real estate post first wave of COVID-19, the sector recovered strongly from COVID-led downturn in the previous quarters. Lucknow real estate witnessed one of the best periods in real estate demand in terms of sales and inquiries in Q3 and Q4 of FY21, and monthly unit sales crossed pre-COVID level in this period. The demand was mainly led by end users. The trend is also supported by increasing demand for houses due to work from home, upgrade to bigger and better houses, and low rates of interest on home loans. However, the second wave has slowed down the momentum in the current quarter due to the lockdown-led restrictions which started in April 21. We have been trying to run the show with digital reach to prospective buyers and customers. Execution was less impacted during the second wave compared to the first wave, as labor migration was significantly lower this time. We continue with our execution in a controlled manner by following COVID guidelines and social distancing measures. Post-opening of the second lockdown, we observed that the revival is not as swift as it was after the first lockdown. Now, I would like to move on to our recent financial and operating performance. Following the growth momentum of Q2 and Q3, we have registered operating revenues of rupees 40 crores, a growth of 14% year-on-year in Q4 FY21. The EBITDA for the quarter stood at rupees 20 crores, which was a growth of 14% year-on-year, and EBITDA margin stood at 50% during the quarter. Consolidated net profit during the quarter was rupees 14 crores, registering a growth of 15% year-on-year. On full year basis, the company generated a revenue of 159 crores in FY21, registering a growth of 24% year-on-year. EBITDA was rupees 75 crores, registering a growth of 38% year-on-year with EBITDA margin of 47%, which was an improvement of 466 basis points. Net profit for the year stood at rupees 54 crores, registering a growth of 38% year-on-year. This year also, with prudent capital allocation and focus on timely execution, we have been able to maintain a strong balance sheet with no long-term debt from banks or financial institutions. As on 31st March 2021, our net worth was rupees 265 crores with cash and cash equivalent of rupees 145 crores. The company has received RERA approval for some projects, Shaurya Arcade, Regalia Arcade, City Plaza, and so on. Importantly, we have also received approvals for our Imperia project, and we should be launching it soon. 10 of our ongoing projects with a saleable area of approximately 4 lakh square feet will see completion in the next 2 years. 6 projects of varying sizes are in launch stage, so we have reasonable revenue visibility for the coming years. With our strong results, we are also looking for additional suitable opportunities. We can now open the floor for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Agastya Dave from CO Capital. Please go ahead.
Was really terribly affected this time around.
Agastya Dave, you may go ahead, sir, with your question.
Hello? Hello?
Yes, sir, please go ahead.
Yes, ma'am. Can you hear me?
Yes, sir,
Yes, we can.
you. Please go ahead.
Yes. Yes. Sir, I hope everyone is safe at your end. Lucknow was very badly affected from what I understand. Sir, I have few bookkeeping questions and then one or two general questions. Sir, what was the area constructed this year?
We'll have to, let me just pull that out for you. So we don't actually calculate area calculated, but we do. We have shared in our investor presentation the amount spent on construction.
Right, sir. The area, the actual area is missing. Okay, it's okay, sir, if you don't have the number. Sir, the inventory that we are showing today on the balance sheet as of March 31st, how long will that take to liquidate? And you just mentioned in the opening statement that you have 4 lakh square feet coming over the next 2 years. So this is the sellable area, or this is what exactly is this number?
So the first question, ready to move inventory should take a year and a half to liquidate, because sometimes the ready to move inventory usually goes fast, but if it is the last 5% of a project, it sometimes takes longer. So I expect to get liquidated in a year and a half. But what was the second question? I didn't get it.
So you mentioned in the opening statement, I missed the point because the voice was very, very low in magnitude. You mentioned something about 4 lakh square feet over the next 2 years. What exactly is that number?
4 lakh square feet. We have some miscellaneous small projects which are getting completed in the next year and a half or 2 years. That is what I mentioned, and those aggregate to about 4 square feet.
Right, right. Sir, also on the balance sheet, you have a number of 42.68 crores as loans. So what exactly is the nature of it, sir? I understand this may be business related. What exactly is this, sir? Can you specify that?
So mainly it is the investment in the Bareilly project, which is structured as a loan, and rest of are given to Eldeco Housing's own subsidiary for purchase of land.
Got it. So basically the increase from last year's number is because of the Bareilly project. That was actually my question.
Yeah, that's right.
Assumption, right? Okay, fine. Sir, in the presentation you have mentioned that the Bareilly area is 389,000 square feet. And you have a 40% stake. So this is 40% of the total amount, and this is hence your number, or this is the total number, and we have to take 40% of this.
We have to take 40% of that.
So we have to take 40% of 389K.
Yeah, that's right.
Right. Sir, from whatever channel checks that I've run in Lucknow, the prices have inched up. I don't have I have last month's numbers, but till Feb, the prices has inched up, and wherever I tried to find out, the prices had moved above 400 for above 4,000 square feet at least. So could you confirm that, sir? Have you seen price appreciation in the region you operate in?
Your perception and your information is right. Prices have increased, and not only Lucknow, they're increasing all over the country in real estate. And
Right.
but whether it is above 4,000 or below 4,000, that depends on the location within the city. So there are locations within the city where it is above 4,000, but there are others which are less than 4,000 at about 2,500 or 3,000. But generally speaking, yes, prices have gone up post the pandemic by about 10 or 15%.
Right. That was my number also, sir. And sir, I'll actually go back in the queue. I have a long list of questions. I'll go back in the queue, sir.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Priyank Gupta from Guardian Advisors. Please go ahead.
Good afternoon, everyone. My congratulations to the whole Eldeco team for spectacular results and more than expected dividend. My question is, I just wanted to have an update on Bareilly project as to how it is going, and is it as per expectation as what it was when it was conceived?
So it is going fantastic, and it is actually exceeding our expectations. We launched it at about 1,800 or 2,000 rupees a square foot, and today's prices are 2,700 rupees a square foot, or maybe a little even higher, and that is within a year. So that's 40% depreciation within a year, and we still have substantial inventory to liquidate. So that goes straight to the bottom line. The work on site has been stop and start, unfortunately, in the last 1 year for understandable reasons. But we are fully inside, and hopefully we should be able to make up for the lost time.
Can we have a sense of as to what percentage of inventory is still left in the Bareilly project?
I think it's there in the presentation. One sec. So out of total saleable area of 8,73,000 square feet, we have booked 4,84,000. So that makes it about 60% is booked and 40% is left.
Can we look at our company, Eldeco Housing, going for similar projects in future?
Could you repeat that, Priyank? You broke a bit.
Yeah. So I just wanted to know if the company, we can expect that company would be looking at similar projects in different vicinities on the same model or the same type.
Absolutely, because I think one of the questions I'm expecting today is that, and it comes every time, is about the growth of the company. And Lucknow, we have not been able to tie up projects of substantial nature in the last year and a half for various reasons. So we did Bareilly as a pilot project. It has worked very well. So it makes sense to replicate that in other cities with the idea.
Thank you so much. Thank you and congratulations again. Thank you.
Thanks.
Thank you. The next question is from the line of Milan Shah from NRI Shareholder. Please go ahead.
Good afternoon, Mr. Bajaj. Thank you for this opportunity. So my question is regarding the business model. As I understand that the listed company Eldeco Housing restricts itself to operations in Lucknow only, and the rest of India rest of North India is covered by another unlisted company. So what is the stake of the listed company in this unlisted company?
No, the listed company does not have any stake in the unlisted company.
So then, Mr. Bajaj, is it not unfair and prejudicial to the shareholders that you have two companies in the same business, one of which is listed and the other being unlisted?
No, it is neither unfair or prejudicial. It is transparent. It has been transparent from day one. The operations of Eldeco are with the unlisted company, except for a territory of 100 kilometers and around of Lucknow. That's where the listed company holds the license to do the business. And that's not something which is hidden. It's been there for 20 years. And that's what all the shareholders know about it. The only thing is that because Lucknow, we've been trying to grow that company, and it was not, we were not able to tie up projects. So we opened up a non-Lucknow market on a pilot basis. Priyank just asked me that question. That project has done well. So we are planning to now open up other non-Lucknow markets for the listed company.
Yes, exactly. Because, I know that it's been around for a long time, but you can see that it is illogical, right? For example, if it is Maruti or Hindustan Unilever, and they say that all our sales only in Lucknow is going to be booked in the listed and the rest of India in the unlisted.
It's not prejudicial.
Minority shareholder, you would not accept it.
It's not prejudicial because it's transparent. There is transparency that the listed company works only in Lucknow. It doesn't have license to go outside and use the Eldeco name. That is, it's a recorded fact. It's not something that, there is cherry picking going on and the unlisted company takes the good projects and the listed company takes the bad projects. All projects in Lucknow, good or bad, go to the listed company, and rest of the territory is with the unlisted company. But we are reviewing that and opening that up. We did that last year with the Bareilly project. It has done well, and I've already answered that we plan to replicate that model.
Yeah, my only request is that it's an excellent management, and we would just request that you look at this closely and give opportunity for the entire group to have better valuation.
Your suggestion is acknowledged. I only would like to reiterate that we believe in governance and transparency, and the fact that the listed company is restricted to Lucknow is a transparent fact. It's not something which is hidden, but we are planning to review that.
Right, sir. Thank you.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, thanks for the opportunity. My first question is, when you say we are looking to expand the listed company in other geographic areas, could you mention what cities or what states?
It's a little early. We will look at, because we are very conscious of our responsibility towards the listed company. It will be projects which give it a decent return and some margin of safety. So we will accordingly, but mostly it will be projects in UP and to begin with.
Okay. And you just share what is the size of the unlisted company compared to the listed company, and any plans to merge that into the listed entity?
It will be unfair for me to speculate as to what the valuation of the unlisted company would be. I wouldn't know, but it's much bigger than the listed.
Revenue-wise, maybe revenue-wise or gain and net or something of that sort.
Much bigger.
Okay. And no plans to merge that into the listed entity anytime soon?
It's not, the proposal has not gone to the board because if we do think about it, the suggestions do come, but there are regulatory hurdles, we've been told. So our consultants keep working on the one. Every regulatory hurdle is stamp duty. When companies with substantial immovable assets merge, local authorities tend to view them as a transfer of immovable property by the back door, and tend to raise a demand of stamp duty, which obviously for our business turn out to be prohibitive. So there are a few court cases going on. I think the matter is pending in the Supreme Court. So that's one issue. The other issue is, you need to take approvals from various licensing authorities. But if those hurdles are overcome, it would be something which will be looked at. But right now, those issues are gray areas. So it's something in the back of our mind. But I would not say that something is actively on the table.
Okay. And when you were talking about the prices moving up in Bareilly, any particular reason for that happening? Is it just or that was the case in the overall market?
You broke, sir. You would have to repeat yourself.
I'm sorry. Is it better now?
Yeah, it's better. Please repeat.
I was saying that in Bareilly, you said the prices went up by 40% in the last 12 months. So I was trying to understand whether it was specific to our project or that was the city-wide or town-wide phenomena.
So three things happen, let me say. One, the market, generally real estate prices have gone up by about 10-15%. That's point number one. But that's much less than our 40% increase that we witnessed. Second thing which we find is that respected brand names, credible brand names are getting a premium over rest of the market. So that probably added another 10-15% to that price appreciation. So Eldeco got that appreciation. The third thing which happened in the project was that the initial prices were the launch prices. And if it is a good product at a good location, we generally leave something on the table for the first few set of home buyers, and then the prices increase. So there's always a difference in the price a year later after launch, and that price difference tends to be in the region of 10-15%. So all three put together added up to about 40%.
Great. Thank you. Back in the
Mr. Rajesh, does that answer your question? Thank you. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. The next question is from the line of Ankur Gupta from Case Financial. Please go ahead.
Yeah, good afternoon to team Eldeco. So I would really say that I have been always happy to be an investor into the Eldeco. But I have a small request, because I have seen when we are talking to our friends and close circles, because of the tight liquidity in the stock, many investors are not interested. So is there a probability that or any option which we have looked on for splitting the stock?
No, not yet. I thought splitting a stock does no value accretion to the shareholders. But if liquidity is an issue, it's something we will have it reviewed. I acknowledge your request. I don't know how it adds shareholder value, but we'll look at it. Maybe it does something to the liquidity, so we'll look at it.
Yeah, even I agree. So it's not about shareholders' value, it's about liquidity. Many investors only see the liquidity and so they do not invest. But we have seen you growing from one place to other place, so we know the value. But that's the only thing which I wanted to ask.
Thank you, Ankur.
Thank you.
Thank you. The next question is from the line of Agastya Dave from CEO Capital. Please go ahead.
Thank you for allowing this follow-up, sir. Pankaj, you have been very conservative over the last few years, and I understand the market was very, very bad and depressed all over India, and real estate was going through its own pains. But now, a lot of real estate companies who have survived all the crisis times are becoming more and more aggressive in their commentary, and they are talking about larger numbers and bigger growth. आपका सर कुछ पॉइंट इसमें चेंज हुआ है? Is there any chance that you will change your strategy, or how are you thinking about the environment now?
No, our strategy remains
aggressive, sir.
No, our strategy remains the same. To say that we were conservative earlier and we'll be aggressive now, I don't think that's correct. We will always look at a possible opportunity on its merit. If we feel that the numbers are stacking up, if there's enough margin of safety, we will go for the project. And in the last 3-4 years, as it happened, we felt that there was not enough margin of safety. We had our issues on the kind of sales velocity which will come in. And in hindsight, we are looking very intelligent and conservative. But it was a good thing to have done. So it worked for us. But we will be using the same filters going forward. But I do expect that using the same filters going forward, because the market is so much better, a lot more projects will qualify and we will be taking a number of projects, is my expectation. But by and large, our attitude and our strategy will remain the same.
That's very reassuring.
Okay.
That's very reassuring, sir. Sir, second question is, in terms of growth, now for the first time, the year-end inventory that we are carrying on our balance sheet is actually lower than, if I assume a little growth for next year on revenues. We are basically matching. Earlier, our revenue numbers were always significantly less than the inventory we were carrying. So is there a chance that next year growth will not be that significant, or do you think you can catch up?
I think there's a fair chance that the number will remain flat next year, because even if we take new projects, it is quite I mean, I don't expect them to hit revenue realization within 12 months of getting added. So it will remain flat for you, but we have significant powder for growth on our balance sheet, as you would have noticed. And we are looking at projects actively. We are also probably opening up new markets for the company. So we see a extended period of prolonged growth for the company, but maybe not, the numbers will remain flat maybe next year.
Right. Sir, one question from your past. A project that you guys were working on, which was the Sultanpur Road project. It was a fairly large project from what I understand. And actually nothing materialized. So were there any problems? Is that on the back burner and you can start working on it again? What exactly happened, sir? And what is the future for that particular project?
There were failures on two fronts on that project. One, we could not assemble the land in contiguous manner. So though we had managed to assemble a lot of land, but it was in pockets and we could not get contiguity. Second, a grey area emerged on the approvals front with the local development authority. If you want, I can give you details of that. But suffice to say, we were not sure at what time frame the approvals will come. Looking at the situation, we thought it is best to exit from the project. We found another developer who was willing to step into our shoes, so we transferred the subsidiaries to them, and that is getting restricted. The sales consideration has already come into the company, and basically we have exited that project. That project is no longer there. It didn't work out.
Right. Sir, inflation has picked up across the board, right? Cement prices are up and steel prices are up. So how are we geared up to deal with this challenge?
I think it's here to stay. And it's something beyond our control. We see that commodity prices have gone up across the board. And they will, even if it is cyclical, we don't think it's going to come down substantially. So be that as it may, the costs have increased, and I think the market will also, the real estate prices have been stagnant for 8 years. So that is also due for an upward correction. They would also correct in tandem, we feel. So we already told it, an example is Bareilly. We launched at a certain price, but we find that the market is willing to accept it even at 40% higher price. Right. And this is something that we would have to fight alone. It's not that it is Eldeco's burden to bear to pass on the prices. The entire market, the entire real estate industry will have to pass on their burden. It will be for everybody, and I think that there will be cost push inflation on the real estate development side. So it's not. Right. I think our margins will remain intact. It would have been a worry if we had sold most of our inventory and had to yet build it. Then we would have been a soup. But fortunately for us, that is not the situation.
Right. So the current, okay, I get the point. Pankaj, just one last thing. I have a small complaint. I put in a request for a conference call some 2-3 months back, and I did not receive anything from any reply from the company. I hope you can look into it, and we should be slightly more proactive in having con calls, at least with funds and institutions. That's it from my side. So it's just a small feedback, not a major complaint, but still, sir, I just wanted to flag it to you.
We will look into it, get back to you. We're sorry for your...
No, sir, no need to apologize, sir. I understand the situation is also very tough with the pandemic and all that. So I understand it, sir, but we should be slightly more proactive. That's it, sir. I'll put in another request for a con call. I hope we can touch base soon. Thank you very much, sir. Amazing work you're doing, and good luck, sir, for the next year.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. This is a reminder to all participants present in this conference. If you wish to ask a question, please press star, then 1 on your touchtone telephone.
That's Priyanka from Arvind.
Ladies and gentlemen, that was the last question for today. Well, sir, we just have one question. We take the next question from the line of Prateek Matre, individual investor. Please go ahead.
Thank you. So before we just close, I had a few questions. So I just wanted to get a take on future visibility for the real estate market in the markets mostly that you are operating in and around, and especially in Lucknow. And my second question would be related to the COVID restrictions. So how has our execution been impacted, and what is the kind of delay that we are seeing, and is there any thing of concern that we should know? So if you could throw some light on that, that would be really helpful.
So I'll take the second question first. Construction sites are minimally impacted as far as lockdowns are concerned. It's one of the first activities which is open in an unlock process. Because construction per se is a socially distanced activity. But it does get affected because of supply chain disruptions. Second time around, the supply chain disruptions were not that bad. The movement of materials, etc., across state borders was allowed. So we seem to be learning this lock and unlock process. Hopefully, whenever if there is another lockdown, the impact would be less. But it does affect, lockdown does affect us on the sales side, because customers are not able to visit the site, and real estate is a touch and feel thing. Houses are definitely a touch and feel thing. So if people are not able to visit, they are not able to make up their mind, and if they're not able to make up their mind, the sales get postponed. But they're not lost, they get postponed. So to that extent, it does affect. The first question is a very large question. What do we think of real estate? We obviously think everybody seems to agree that it's a great time in the long run. That was never in doubt for so many reasons: young population, urbanization, low penetration, low interest rates. I think the question always is in the short run. And in the last 7-8 years, the short run has been kind of flat or bleak. But for the first time, everybody agrees that even the short run seems to be great, and I tend to agree with them. The real estate market is cyclical and has been due for an upward correction for a long time. And all the stars are aligned for that. So everything is working out. We think it's going to be a period of at least 5 years of sustained growth for us and most of the other players in the market.
Thanks a lot. That answers my question.
Thank you. I would like to remind participants again, if you have a question, please press star then 1 on your touchtone telephone. Ladies and gentlemen, that was the last question. I would now like to hand the conference back to the management for their closing comments. Over to you, sir.
Well, thank you, everybody. Thank you for your interest, and I hope we keep living up to your expectations. We have taken your points. We'll work on them, and see you in 3 months. Thank you.
Thank you very much. On behalf of Eldeco Housing and Industries Limited, that concludes this conference. Thank you all for joining. You may now disconnect your lines.